An International Monetary Fund official has said that the Chinese government has the tools to contain risks to the economy going forward, calling for a boost to productivity to support high-quality growth in the long run. Noting that there is significant fiscal consolidation this year, Helge Berger, IMF China Mission Chief and Assistant Director in the Asia and Pacific Department, told Xinhua in a recent interview that the Chinese government will have to try to strike a balance between making sure sovereign debt doesn't increase too fast and continuing to support the economy.
We have seen a tremendous fiscal consolidation in 2021. The fiscal deficit, which is a good measure of the overall fiscal behavior of the government for the entire country, has improved by 9% of GDP. That is a tremendous turnaround from the fiscal support we saw last year at the height of the pandemic. So the government is obviously trying to balance growth support and the need to slow the growth of domestic sovereign debt going forward. But it's a delicate balance, and we would hope that fiscal policy next year will be more neutral.
In its latest World Economic Outlook, the IMF projected the Chinese economy to grow by 8.0% this year, a slight downward revision from the previous forecast. The Chinese economy is on track to grow by 5.6% in 2022, according to the report. The IMF official said the Chinese government has rolled out a series of regulatory initiatives in recent months, noting that some of these measures are done with a very good reason.
There's certainly a question about competition policy in the tech sector. There, of course, is a reason to look at sectors like the property development sector, because corporate debt is very high, and bringing this down over time is a very good policy target. But it's always important to be gradual in the way you implement these policy changes. It's important to not surprise markets too much and to avoid investor uncertainty around these measures.
On electricity shortage, the IMF official said it resulted from a coal shortage, combined with China's long-standing regulations to improve the energy intensity of the economy and to slow the growth in energy consumption, adding that the government has ways to address both issues.
We note that some of the announcements that we have seen sort of put a greater emphasis on market-based incentives to improve energy intensity going forward. These are very helpful developments that should help China achieve its 2060 goals going forward.
Looking ahead, Berger said he believes productivity is going to be the key driver for China's long-term economic growth, encouraging the country to accelerate its transition toward high-quality growth.